Hey guys, John Hunter coming back to you again this week with another rate update. This one for the week ending in January 19th. So, hey, they say you can't have a good week without having bad weeks, and that's exactly what we had this week. After a string of stronger than expected economic reports, we had a little bit of a uptick in rates. So, 30-year fixed, we're about 6.625, 7.25. 15-year fixed, 6.125 to 6.75. FHA 6.5 to about 7.25. VA 6.25 to about 6.75. Hey, and I'm going to add a new one this week, one that I get a lot, and that's down payment assistance. This is usually FHA product, anywhere from about 7 to 7.375. So that one actually trails behind all the other rates. So that's why that's actually much more in line with, say, current FHA product, and comes with a down payment assistance. So, hey, these rates are all subject to loan amount, credit score, loan type, area, income. There's so many different variables that go into affect the credit or the rate, the final rate that you get. So if you have any questions, you want something individualized, something you can actually count on, give me a call. I'd love to help you out. No obligation quote. So there you go. So this week we had retail sales, consumer sentiment, employment all come in a little bit stronger than expected. Basically dialing back the prospects of a Q1 rate cut. Even the Atlanta Fed came out and said that we aren't going to start seeing rate cuts until sometime in the third quarter, which I don't necessarily agree with him, but you know, that's what we're going to have to deal with here right now. And like I've been warning you guys, this is going to be a roller coaster with rates. We're going to see weeks like this where there's going to be a slew of strong economic reports followed by maybe some disappointing reports. And we're going to see these ebb and flow as far as like the predictions on when rates cuts are going to happen. But rest assured, like I talked about a couple of weeks back, I believe that it being an election year, this year, more than any other year that I've seen, I believe that the Fed is going to take a political take on this, and they're going to force rates down one way or the other, regardless of the data that backs it up. So that's going to bode well for interest rates, right? I think that's going to bode well for consumers. They want the consumers to feel good about housing and about the market and about the economy going into the election. Both parties want this. So I think that being said, we're going to see a real push for that. And that's why I don't believe this is going to stick or be long term. A week or two doesn't equal a trend necessarily. But I think this week was pretty ugly, probably the worst we've seen in probably 6 weeks. But I do believe it's going to be reversed pretty quickly, and we'll be back on track coming down. So, hey guys, one way to find out is come back every week. I'll be doing these every week. So like, subscribe, and share. I'd love to share more content like this. I have a couple videos I can put out every week, hopefully about topics you care about. So like and subscribe and come back for more. John Hunter, your mortgage guy, and I will talk to you soon. Bye-bye.